Hey, this is Nick, and today we're talking about a really important but often overlooked concept, and that is the difference between markup and margin for builders and contractors. This is an amazing topic. We go into great detail in our end-to-end course, Builder Books Academy, but we're going to talk about how we can actually get this implemented in QuickBooks Online. Super easy, but so vitally important. We need to take some time on it. So getting started with what is markup? Markup is a percentage added to your cost. So almost all builders in some way, shape, or form are taking the cost of the work that they do, the materials, the subcontractors, the labor, they're adding a percentage to it, and that becomes the price to the customer. Whether you're doing cost plus or a fixed price job, you're still doing some form of that. Okay, that's typically what's going on. It is important to note that this is not our margin. Okay, the word margin is commonly used to refer to your gross profit margin on a project. Okay, they're both percentages, but they're both different. One leads to the other, but they're not the same. So our markup is considered during estimating our fixed price projects, or of course, tracking our time and materials projects as well. Auto-calculated within QuickBooks, especially for that cost plus, that open book, that time and materials type project. So I'm going to show you that, how it works, okay? But it's important that we know that these two things are not the same. Markup and margin are not the same. So determining your target markup, right? So this is a good way to think about this. You probably have in your head a good gross profit percentage that you think would make your business run, right? Whether that's 25%, 30%, 20%, whatever that is, we need to determine what your markup should be to achieve that. Okay, so the calculation for this is markup equals margin divided by 1 minus the margin. Okay, so kind of a complicated little formula here, but it's easy when we break it down. Basically, I want to know if I have a set margin that I want to achieve, what is the markup to achieve that? All right, and so let's say that I want to make a 30% margin. That calculation would be markup equals 0.3 divided by 1 minus 0.3. That gives me a markup of 42.86%. So if I know that my business can run efficiently to reach my net profit, if I have a 30% gross profit margin, I would need to be marking up my materials, subcontractors, and labor 42.86%. Okay, that's not necessarily the case for every business. This is an example. This is not necessarily a suggestion, but that's just how the math works. Okay, so no matter what, it's essential that we think about things, and we need to think about that margin because that's going to determine if we're successful or not. As a builder, as a contractor, I want you to be looking at that margin constantly. I'm going to show you some of those reports that we need to be looking at. That margin is really, really important. But we also got to think about, well, what is the leading cause of that margin? It's whatever our markup is. Okay, so if our margin is too low, it means that our markup is too low. Two things aren't the same. But we need to see how they relate together. A very common mistake is to say, hey, I need a margin of 30%. I'll just mark up that much. That is not going to do it. A markup of 30% gives you a much smaller margin in the 20s, okay? So you should be able to answer this question in real time. What is your gross profit margin? That's what QuickBooks is going to be able to allow you to do. I'm going to show you that in QuickBooks right now. All right, so moving over to QuickBooks, and by the way, we have this brand new cool interface. So I'm recording this in July of 2025, and this is all new. So a lot of you are probably getting this new kind of interface, which is neat. But I have my sample company up here. We're going to look at how this markup and this margin actually works. So the first thing is that if you're doing time and materials, you're going to set your expenses to be billable, okay? And when you do that, you're going to indicate a default markup. Now, this default markup doesn't need to be the markup on everything. This is just what QuickBooks will do to help you get there, right? They're going to default everything to 35% in this case, and that is useful for us to kind of save us time, but we can, of course, change it on a case-by-case basis. So I've set my default markup, and then it's going to ask you if your billable expenses go into a single account or multiple accounts. We have various videos on that. Again, Builder Books Academy, we go into detail on that. I just want to demonstrate for you how this markup translates to margin. So to do that, I'm going to go into a project that has pretty much nothing going on in it so far. If we go to here, projects, and I've got this, let's see, this project 128 Buffalo Street right here. Okay, so I've got this project up here. I've got a little expense. I'm going to add another one. So just go here, add an expense. Now, I can add an expense to a project in many different places. I can do it right here. I can, of course, do it on the banking feed as well. But I add a kind of a manual expense, right? That would be something where I'm going in here and I'm saying, let's say framing material. Okay, right there. And you can see that I'm defaulting to billable with a markup here. Okay, so here's my framing material. I could just say like LVLs, and I could say $2,000. okay, that's currently marked as billable going to this project. Marking it as billable doesn't recognize revenue yet, as you'll see, but it kind of saves it so that when I have an invoice, I can add it. All right. So we're marking as billable. You see that my markup here is 35%. Again, that defaulted for me. I can, of course, change it here, but generally speaking, you're marking everything up at some kind of consistent clip. All right, I'm going to save and close this transaction. This is simply the expense side. And you can see the expenses of my project are starting to build. I've got my construction materials at $2,600. By the way, you saw that I used products and services, not category. Okay, that's really important. I'm just going to go into this one more time to bring that home. We don't want to be using category for our construction costs, for our project-related costs. We want to use products and services so we can use cost codes. Again, we go into this in great detail in our end-to-end course, BuilderBooks Academy, and I have a tutorial on how to do products and services. But let's just assume we know that. Let's go back to our project details. So far, no revenue recognized. But when I go to add to my project an invoice, it's time to invoice the customer, receive some revenue. You can see that the suggested transactions show up with my markup. And if I add those to this invoice, you can see that the cost gets added as well as my markup, okay? And if I just save this invoice as is, I have send later on, so let me turn that off. Okay, so I'll save that and just kind of X out here. So my income has gone up to $3,577.50. Okay, my costs stay the same at $2,650. Notice my profit margin is 25.9. Okay, so a 35% markup yields a profit margin of 25.9%. Okay, and so it's up to you to think about, is that profit margin good enough for us? Now, if that was my net profit, I'd say absolutely that's good enough. But we need to understand is that not every expense is tagged to a project. We have general expenses as well. So you as the contractor, or you as the bookkeeper for a contractor, really need to dig into this profit margin that leads to profitability on the net profit level. I'm going to go to that next. But understanding at the project level is a great way to see it. So here's my markup, and there's my billable expenses. And we can see this on a project report, a little bit more of a formal profit and loss, where there's my total revenue. And I love to do this to also compare to a percent of income. And I'm going to do this on a larger scale in a second. But there's that markup right there, or that whole margin really, which is right there. I'm sorry, the gross profit. Yep, the 25.93. All right, so that's great. On the project level, I'm running at 25.93, but what about the business as a whole, right? So we have general expenses as well. We're going to treat everything project related as cost of goods sold. It's all going to land here. That's going to give us a nice, strong gross profit number. And then from that, I subtract general expenses to get my net income. So let's see what that could look like as for the business as a whole. Okay, so I'm going to go to my custom reports here. I've got this profit and loss here that we're going to use. Okay. By the way, now we're on the modern view. So QuickBooks has this new like modern versus classic view. I'm liking the modern view quite a bit. It allows you to, in this case, collapse it, and I can also get rid of cents really easily. So I'm just going to do some of that. And I encourage you to use custom reports because you can save time on a lot of this stuff. Okay. So here I've got my income, my cost of goods sold, my expenses. I've got some other expenses, and then I've got net income. Okay, so income should be self-explanatory. That's all of our revenue. Cost of goods sold is all of our project-related expenses. Then our expenses are all our general business expenses. And we want to know percentages for all of these. And so that's where we're going to go over to display and, compare and go to percent of income. And I want you to get used to setting up almost all your reports to show this percent of income and save that. Because that's going to show you as a business, all of our projects together, what's our gross profit margin, okay? What is our expense percentage? And then ultimately, what is our net income percentage, right? And you're going to learn really quickly, like if your expenses are running at a 25% clip, you better be getting way more than 25% gross profit margin, right? Because you're going to get to zero pretty quickly there. All right, so all of these work together. Now you can see here that I'm running at about a 32% profit margin in the sample set of books, okay? And so that's a little bit higher than that 30%. Maybe 30% is my goal, and I'm looking at this all the time to see if I'm getting that. And then I know my expenses is around 15. And that gives me a net income of 15. So you as a business owner, you as a bookkeeper, you want to really look at those three percentages all the time. Gross profit percentage, expense percentage, and net income percentage. Okay. Now, the cost of goods sold percentage is the increase or inverse of the gross profit percentage, so you can look at either of those. But those three numbers are really driving the bus to whether or not you're profitable. And it starts at the top, meaning it starts at the cost of goods sold. That's what we have the most control over. Okay, we can mark that up more to increase our income and increase our gross profit margin. So we have to be looking at this constantly. It's not enough to say, hey, I want a 20% margin, I'm going to mark up 20%. Way not okay. We're going to be gaining a lower margin, somewhere in the teens, right? And that's not going to be able to suffice, right? So understanding this and having your reports regularly show you this is essential. This is a huge best practice. All the clients and students I work with, we start with the profit and loss and we say, are we looking at gross profit percentage, expense percentage, and ultimately net income percentage? If we're not even looking at it, we got huge problems. We got to get our books in line, make sure we're doing that. All right. So let me know if you have questions on this. Markup, margin, not the same. Your markup leads to your margin, and you have to mark up more than you think, usually, to get the margin you want. Definitely check out Builder Books Academy. We talk about this and so much more in the course and in the adjoining community, where I'm here to support you all along the way as well. And I'll see you on the next YouTube video.